Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago. Talking metals, let's talk base metals. Copper down over 2% today. Copper is now down 6 straight weeks, down 18.8% since it made the high at 3.3155 on June 7. So that's 18.8% lower. We're down 6 straight weeks in a row and 21 of the last 30 sessions. Pretty big bear market in copper right now. It, to me, is the most important base metal that we have a futures contract that's tradable on. It's directly related to China, and Chinese growth is part of the reason that copper is down. China had a decent GDP number, 6.7%. It was expected at 6.8, but it wasn't that bad. But when you started looking at the underlying Chinese growth, there were some problems. There were some manufacturing issues in the figures, some industrial production issues in the figures, some revisions of prior figures a little bit lower. And China is trying to promote growth now with the Yuan fixing and encouraging banks to make loans. They dropped the Yuan fixing, which is the fixing to the dollar, below 6.7 Yuan to the dollar for the first time in a year. Now that's not really letting the currency devalue. It's just moving that fixing down because there's been natural selling down about 14% on the yuan versus the US dollar, which is a bigger indication that the yuan is actually weak. With the trade tariffs, one of the tools to possibly help the economy would be to allow the yuan to weaken against the US dollar, which would sort of counteract at some level the tariffs making Chinese products cheaper. That's hitting copper pretty hard because, again, it's confirming that the Chinese government believes that the Chinese economy is weak and China is the largest user of copper. Also, the dollar is stronger, so we've got the typical dollar commodity inverse relationship taking over there. There's no sign of any real dollar weakness coming anytime soon. The two-day testimony of Jerome Powell is over, and he was not overly hawkish, but he did not back off from the idea that the U.S. economy could indeed accept and live through the rate hikes that the Fed already seems to have in the pipeline. So copper down over 2%, now heading for its 6th week in a row, barring some sort of huge rally tomorrow, 6th week in a row lower for copper futures. This is Bob Iaccino talking about copper at 2.692 from the CME Group trading floor in Chicago.